Bam, baby, we are back. I am pumped. I am so pumped for today. It's unfortunate that we had a horrible pullback. The first thing I want to show you right here is the stock heat map. You look at something like this and you cannot help but to ask yourself, why, oh why, oh why? After a beautiful day yesterday, and we pushed up higher and higher, and we got above that 21-day moving average, I was just getting ready to say, we're in the clear, baby. We seen we were above the 21-day. We seen we got to push higher on volume. We seen that the market really wanted to be advantageous here and take off to the north side. But ladies and gentlemen, I'm here to say, I got smacked. I know a lot of us got smoked today, but that's A-okay, because that's why we use the 21-day. Now, here's a big reason why I am happy though. Pullbacks show us setups. And that is what we are going to be looking for, is what is relatively strong in the market. So when the market does start to bear fruit, so that way, and I shouldn't say bear fruit, right? Ooh, we don't want the bears to come back, do they? Because I know they're licking their chops right now. But anyway, before we get down deep to the nitty gritty to show us how we really can protect our accounts, I got to say hello to yours truly. Dan the greatest moderator alive, is with us today. Thank you so much for being with me, Dan Bob. And we have Damn Yankee. He says he's going for a fish fry real soon. Woo-wee! You know we eat our fish here in Michigan. Why? Because the Lake Erie has got the delicious, most scrumptious fish of all. That bluegill. We got the catfish. We got the perch, my favorite. A nice perch sandwich. Slap a little mayo up on that biscuit, and we are having ourselves a fish fry, baby. It's good to see you, Yankee. Good to see you, brother. Good to see you, Tainch. Good to see you, Roberto. Good to see you. Who else we got in here? Jimmy Bright. Yes, of course, we got a good old Jimmy Bright. Jimmy Bright's good to see you, brother. Yeah, making me hungry, Yankee, Jimmy says. Yeah, man. I tell you what, the old lady made some no-bake cookies, and I drink a lot of water. Today, and the reason why I did a lot of this was simply because we had such a red day in the overall market. I tried to stay away from my computer as much as I possibly could, and we decided to go to the local peach farm. They were doing the peach pulls and all that stuff. So we took the family down there. It was nice. It was definitely nice to go down there, spend a little time with the family. We got a bushel of peaches. I don't think it's a bushel, a basket. I don't know the sizes. A bushel, a peck. Maybe we got a peck of peaches. But I tell you, some of these peaches now, man, they're monsters. This thing was like as big as my damn fist, you know? Delicious, though. Delicious peaches. We got some Calder's Farm chocolate milk. I know you guys don't know what that is, but it is a local farm that makes the thickest chocolate milk. It's almost yogurt. It's so thick. And man, we had an awesome day. We swam in the pool. It was a nice hot day today. I think it was probably close to the 90s. It's still 78 out there. But yeah, we had a great day today. And that's what you're supposed to do. When we have big pullbacks like this in the market, guys, if you are anything like myself, folks, what you need to do on days like this is just walk away. We're having big bloody pullbacks. We're below the 21-day moving average. Why sit in front of the computer? Why sit on your phone and look for trades? No, you step away, you hang out with your family, you do something for yourself, whether it's something to learn, read a book, go for a walk or run. For me, it was jujitsu, and it was going to the local farm and got some peaches with the family, got a swim in. You know, that's what we want to do. When we start to see a bloody sell-off and the S&P 500 get below a 21-day moving average, hey, hands off. You know, there's no real reason to be here. Now, of course, I always bring that positive news. I always like to be advantageous as we look for bigger and better setups. We are still holding new higher lows here. We are still holding new liar hose. What the hell? New higher lows here, guys. New higher lows. We are still holding out. So there is still some positive news for that. But just as I like to see higher volume on a push-up to see a follow-through day, what we don't want to see is higher volume to a push down on a downside reversal day. This was an expectation breaker right here, ladies and gentlemen. That is not what we want to see. That is bad. That is
Brother, ugh.
Brother, ugh, that's gross. That's not what we want to see. We want to see this thing pop up here, maybe pull back a little bit. Maybe have a couple of inside days here. Get tight. Show that investors are building up their portfolios before we rip tater chip to the north side. But that is not what we did here. Absolutely not. That is bad news bears. Okay, so guys, definitely keep a very close eye on the overall market because this is the time that we learn. This isn't the time where we take trades. As a momentum trader, we are looking for momentum. This is not momentum. This is failure. This is failure to communicate. So what we've decided to do today, pay attention please. Wake up people, drink your coffee, pay attention for 1 second. What we're going to do is go over risk reward, okay? Because I know that there's quite a few of us that are out there right now that are having an issue with that risk reward and understanding your R multiples. I'm going to go over a trade with you. We can pick any stock. We can show you a risk reward situation. And I can show you exactly, excuse me, how to do that on this platform, this beautiful TradingView platform. And of course, if you would like to have this TradingView platform for absolutely free, click the link down below. I have a link tree in the description down below. You click that link tree, you go down to TradingView, you use my affiliate link. Not only do you get to use this for free, but if you decide to sign up for the essential plan like I have, it gives you a couple of extra things. It's really cheap. It's only like 15 bucks a month. You'll be able to set up your charts just like we have here, okay? Just like we have here. And we are going to also show you how to use a beautiful indicator to show you risk reward, okay? And that way there is no questions as to what is or what isn't an R ratio. It's all right here. Risk reward ratio 1:1. You have one block down, you have one block up. This is 1R to the sell side. This is 1R to the buy side. And you can see it's 1.7%, 1.7%. And we are going to go over that so everything is crystal clear. We got 10 of you in here. Can you only guess what I'm going to ask you to do? Ladies and gentlemen, I'm going to refresh this page. And if there's not 9 likes on this, I'm going to do a backflip. There's only 8? Who the hell is it? Maybe it's me. What if it's me? No, I've liked it. I've liked it. Who out there? I'm going to find you and I'm going to get you. Nalani, what's going on, brother? It's good to see you, brother. It's good to see you. We got a poll out here, too. Do I need to read it? Let's just see. Let me catch up on the chat, though. Nalani's in the building. Good to see you, brother. I'm proud that you're here. B. Stewie is here. He says, I love naps. Yeah, Dan Bob, if you're having trouble in the market, we're having a pullback, go take a nap. Sit back, relax, and let the fire burn things down, baby. Let it burn, baby, because the bigger pullback that we get, the better setups that we get, and the more money that we can make in the near future. I'm happy to say the only thing I am holding, which we are going to go over very soon, is 20% of my portfolio is in the IWM, which took a hit today, but it's only 20% of my portfolio that took a hit in this market. And I'm very proud to say that. I really am very proud to say that. All right, Yankee says, showing 9 likes on my phone. Well, there was 10 of you in here, okay? Okay? No, only kidding, guys. I'm pumped. I'm happy to be here. I'm happy that you are here. So let's get right to it. We have the S&P 500 below a 21-day moving average, trying to hold this uptrend, but still below a 50-day moving average. We have the QQQs. Why is this not set up yet? Because I am lazy. No, we are well below a 50-day moving average, and it's trying to hold this anchored VWAP from these lows. How do I pull an anchored VWAP? Well, we have this beautiful charting platform that you can add anchored VWAP to your little piece up here. If you scroll through this, you will find in this setup, you will find the anchored VWAP somewhere in this area down below. Let me find it for you really quick. Where did it go? Well, now I don't know where I put anchored VWAP at, ladies and gentlemen. Where's your anchored VWAP, Dave? Oh, now you can't find it. Now that you're trying to show people shit, you can't find it, you dumb piece of... There it is. No, that's anchored volume. There's anchored VWAP. It's starred and everything too. And all right, so once you find it on your chart, you can just click the star button and it comes up here. So that way, if you ever want to try and show anybody, you don't have to find it in this thing again and look like a complete doofus. All right, so you click anchored VWAP. I pull this on its low, and then look, it anchors this VWAP to this price and time, and it shows you where the average volume is traded. And look, this is why we're seeing new higher lows across the board, is because it's trying to hold this volume weighted average price from its previous pullback here, okay? And you can use anchored VWAP if you download this beautiful charting platform. This is great. This is a great piece of advice to help show you where our line in the sand is. We already know we're below all these moving averages, but if you want a better indicator, something to show you what else is out there holding, here is another piece. Here is another indicator that you can use. Now, aside from all the indicators, you guys know just as well as I do, below a 21-day moving average, I'm carrying on. Carry on, wayward son. The IWM, look at this, guys. Big push up. It's trying to hold this area. Now, we could do anchored VWAPs on these, and we can pull it from this low as well. So I click on anchored VWAP. I click on the low of this area, and oh, well, looky there. It's trying to hold its anchored VWAP from its previous low. Okay, you guys see that? It's very interesting how these anchored VWAPs work. You'll see a lot of stutters and a lot of shakes. Why do they work? Because anybody that has bought in this IWM, this Russell 2000, or any of the small stocks, if they got in around this low or just after this low, they are in the money, okay? We could even pull back an anchored VWAP from back here, and you can see they are in the money, okay? So everything's looking good now. What else we want to see is from this previous high is what I like to pull. So I'll pull it from here, and it looks like we just broke below that. So right here, we're kind of in an anchored VWAP pinch. Now, this isn't the anchored VWAP pinch. These need to get tighter here before we see what happens to the upside or to the sell side, okay? So we're going to see very, very soon what happens in those areas, but we need to give it plenty of time. Below a 21-day moving average, I will definitely call my financial advisor and cut those last shares and be 100% cash. I'm totally fine with that. Actually, I'm very proud to say in my overall large account, I did not lose a dime on this pullback, on this bloody pullback today, which is actually surprising, noting that I did have quite a bit in the small cap area. But, you know, I'm watching it like a hawk too. So, all right, next up is the mid caps. The mid caps looking just like the small caps. You can see we're just above that 21-day moving average. So we will see very, very soon if this can hold this area. We could do the same thing we did on the last two. We grab an anchored VWAP, we smack the low, and we see where it go. Right here, up just below a 50-day moving average. So you can see the 50-day moving average is lining up with this anchored VWAP. Now, what about the highs? Great question. I'm glad that you asked. We grab the highs, and you can see we are just below. So same thing. Maybe in the future, we get an anchored VWAP pinch, and then we pick which direction we want to go. But right now, the small and mid caps are still leading. They're still holding, and things are looking good. Yankee says, VWAP is volume-weighted average price, isn't it? Well, you seem like you are a smarty pants, Yankee, learning so dang quick. Yes, absolutely. VWAP, volume-weighted average price. It's taking the average price of where the most volume was, and it shows you and plots that on the chart for you so you can see where the majority of people have bought in it. All right? All right, so we went through all that. Now let's look at what I always like to look at, and that is the equally weighted. So when we look at the stock heat map today, you can see health and technology did well. You can see that consumer durables and utilities did well. What does that usually tell you? Well, health and technology has been getting it since January. So utilities and consumer durables, this is usually a place that people run when they are fearful, okay? And a lot of times, energy. Where's energy? Let's see. Oil, energy, and minerals. So it doesn't look like they did very well today either. But utilities, consumer durables, health technology, those are all up. These two here are the fear ETFs. It's just kind of where your hedge funds and stuff will park their money in case something bad is happening. And it looks like that is what is going on. So when we look at the equally weighted, it helps consolidate some of these bigger stocks like Apple and Nvidia taking up most of the technology sector, and it makes them all equally weighted. We're still above a 10-day moving average, and also look at this. It's the all-time high. I do like to see pullbacks and tests of those all-time high. So we still have some thread of hopium to smoke, okay? Now, I don't condone smoking, but when it comes to hope, people love to hold on to a thread. I know I sure as hell do as well, because right when you think it's all over and you think everything's coming to an end in the overall stock market, there comes some more whipsaw action. The VIX volatility index seems to subside and then everything is all right. Now we are also in an area, which is the summertime, that usually shows a little dip, a little slowing down, a little less, all the rich people in New York, all the rich people want to go to their yachts and go to their vacation homes, and they're not trading. Okay, they're taking some time off. It's a seasonality thing, and it's very true. I know last year that we didn't have a lot of seasonality issues, but this year we are actually back to that seasonality. Okay, now the VIX volatility index is back up in this area. We've pointed it out, guys. We called this out down here. I keep tooting my own horn about this. We call it out. Bada bing, bada boom. You're going to be losing money soon, this thing says. And here we are up above this area. So will it start to subside here now? That's the real question. Or are we going to break out above this area and continue higher? That's the real question. And if we do, you can expect more sell-off in the overall market. All right. So now what we are going to do, guys, is we're going to pick a random stock and we're going to go over. Oh, actually, let me go through the sectors just really quick. It'll only take me a second. So we talked about the S&P 500, the mid caps, the small caps, and the QQQs. We know that the small caps and the mid caps are doing the best currently. How's Bitcoin doing? It's still holding up above a 50-day moving average, and it's riding a 21-day moving average. Now, that was delicious. All right, we have XLK. So this is the technology fund. It's going to look the same as QQQ. But if we look at the energy fund, you can see it's below a 50-day moving average, consolidating here sideways below a 50. So it's not a hot sector. We want to see what the best sectors are holding up. XOP. What is XOP? This is the gas exploration and products. It's making lows today. It's trying to break that trend line to the sell side. Now, communication is still doing just fine. Communication did have a pullback today, but you can see it's still above a rising 10 and 21-day moving average. Now, I am in ASTS, and that looked extremely well. I'm actually up 16R on this trade currently. And it's a beautiful thing, guys. And maybe I'll use this as an example. Let's get through the rest of this. But this is in the communication sectors. That's why I bring up ASTS. So I'll bring up the trade that I'm still currently holding. And remember, I did not take this in a negative environment. I took this when we were in a positive environment, in a very relatively strong stock, in a higher average daily range stock. So that way, when we do get pullbacks like this, sometimes you're still riding them out. And that's exactly what we're doing for this, okay? So we'll go over that in just a second, but that is in the communication sector, which is still doing well. That's why we picked a hot sector. We picked a strong stock, and we picked a high average daily range percentage mover, okay? Exactly for this reason. Now, XLU, you can see a big pop up here, and look, it made new all-time highs, okay? If we zoom out, you can see this big cup, maybe not all-time highs, but for the year, it's definitely the new all-time highs for the year. The only other time it's gotten higher than that was just a couple dollars higher, and that was back in 2022, okay? All right, so now that it's made this cup, not even a handle, it's starting to rip to the north side. That is XLU. Now, the last time that Dan, Bob, and I have scoured the market for those stocks, for the XLU stocks, we could not find any fast-moving stocks. So if you could help me out there, you great, great people that are out there, if you could help me find some stocks that are in the utilities sector that are faster than 4%, that would be great. That would be great. We scoured the market. We could not find many that were in this sector that was going to make us any kind of money. Okay, they're all slower sectors. They're all old boats. Excuse me, man. I didn't drink an energy drink before this, guys. Forgive me. Dan Bob says recession fear. There is clearly recession fear when utilities is going higher. Usually you get energy heading up higher with it. We're not seeing it. But big pullbacks, and the VIX volatility index is rising. So there is some fear. Tomorrow it might all change. We also have XLP. Well, there's fear too with the, with the election coming. There's always that fear with the election coming. Usually after that, it's over. But we don't have very long until that'll all subside. So we need to remember all this, guys, because in another four years, it's all going to go down again. So remember how this plays out. Maybe this is just a time, 4 or 5 months before the election. We just step back, save your money. We also have consumer staples. Now, why is consumer staples moving so much higher and looking so much better? Well, what do people need in a recession? They still need food. They still need milk. They still need eggs. They still need their consumer staples, right? So your Kroger's, your different food places where you buy your foods, they're also going to be doing good. So people park their money in these safe sectors. Why does it come out? Well, when people get very speculative, they go, okay, well, these are inflated. Let's go put them into Teslas or Nvidias or something a little bit more speculacle. Am I saying that right? Yeah, I am too, Dan Bob, for sure. Yeah. So when these XLPs start to rise, that is a sign of fear sessions are starting to pop in. And, we've had a lot of, influences on this as we've ran up. Now we have XLV. This is the cool thing. XLV is still doing so stinking well. It is really, hands down, the best ETF to be in. This thing has been continually heading higher each and every day with very minor pullbacks, and each pullback has been shown fruitful, holding different trend lines. I think this was the biggest, the most fearful one, but then it set in this beautiful trend. It pinched tight. I was expecting this to get a little bit tighter before it took off, but hey, can't argue with the market. All right, XLI, this is industrial. It's still holding above a 21-day moving average, so that's still looking good. Consumer discretionary is definitely down below a 50-day moving average. And XBI, this is the biotech. It had a pullback, which is interesting to see. Still above a 21-day moving average, though. So let's see. The only other one I want to look at is XLF, and that is still holding up above 21-day moving average. So we had a big pullback in a lot of our used-to-be leading sectors like XLF, but XLV, we're still holding out very, very well. So it's looking very, very good. XLV is your baby. I know you got some money in that. Oil is doing good. Well, yeah, I mean, if we look at the oil ETF, I know if we look at ExxonMobil and we zoom out here, yeah, it looks like ExxonMobil's doing well. The ETF, which is in the energy though, which is XLE, is not doing so well. It's below a 50-day moving average. But if you look at XOM, the strictly gasoline or oil, energy minerals, this very specific stock is doing well. It's holding above the, looks like the anchored VWAP here from the highs. And it's also making new higher lows down here. Let me move this to the highs here. There we go. Yeah, it's pulled back now. It's trying to hold the anchored VWAP from its highs. It's above all moving averages. This is XOM, this is the biggest weighted in this ETF. But in the energy, you can see here, it's just trading sideways. Just trading sideways. It's below a 50-day moving average. So it's trying to hold out, but it's definitely not a leader in this sector. But yeah, Dan Bob, I can see why XLV is your baby. It's pretty much the only thing that's been out here actually doing well. You can see XLV, aside from this lull of sideways action for about a year, it's just been pushing up higher now. So it's looking really, really good. Okay, so now that we went over the sectors, we've seen a lot of different pullbacks here. We've seen a lot of different areas that have big pullbacks, like XLF. It's still above a 21, but had a big pullback. What was the other one? XLC, communication. We had a big pullback on this as well, but still above a 21-day moving average. But XLV is still rip-roaring, okay? Now, one thing that I really need to point out, we talked about this yesterday and the day before, how we are not seeing any setups in the market. So let me just bring you back to the S&P 500 here, guys. We were talking about this when we were above a 21-day moving average. Covey reinstated. I reinstated. We all said, look, we're above a 21-day moving average. We're looking like we have a follow-through day here, but we are not seeing any setups in the market. The few that we did show you, we couldn't even justify those setups. I want everybody to remember this, please. I mean, I understand. If you're listening to me in the background, that's fine. If you're not staring at a screen, I don't expect you to. But if you are listening to me right now, please let me have your damn attention. I'm not just doing this for you. I'm doing this for me too. I need to make a moment out of this because the biggest issue that we have, okay, is we forget. I want everybody to remember this. When we get a big push up on our price action and we get into an area where we are still risk on, but there are no damn setups in this market, you need to really, really pay close attention to that because we're expected a pullback. Multiple times has Covey came into this chat room and says, well, I don't see any setups. I don't see any setups. He did that up here. I remember this. He kept saying, well, I still don't see any setups. I'm worried. I'm nervous. And I was like, hey, I'm still risk on. Hey, I'm still above a 21-day moving average. Hey, I'm still making money. And then it happens, right? Then we're pulling back up. And we weren't seeing any setups in this whole area. We'd catch one or two. We found ASTS, but that's about it. Okay, and we're going to go over ASTS very, very soon. But guys, when we're not seeing trend or base breakout setups, while we are still risk on, that is when the alarm goes off. What's going on, Joseph? It's good to see you, man. PPH. What is PPH? Let's take a look. Let's take a little peeky gander. Oh, pharmaceuticals. Yeah, pharmaceuticals, biotech, and healthcare. They kind of all just go together. PPH is, I really like the way this thing's trending, actually. This is clean. This is a clean trend on this ETF. See how clean that is? I really like PPF. Yeah, that's a nice clean trend. I really like that. It's almost like ranged here, you know, like a range trend. All right, guys. So yeah, next time we are in a risk on scenario, please keep in mind, remind everybody in the chat room, we are risk on, but where are the setups? It's time to be careful. Okay, it's time to be careful. What's up, Muley? It's good to see you. I'm glad you're in here. I hope everybody is doing absolutely awesome today. And now, before we go into the section that I want to talk about today, all right, we're also gonna record this. We'll have Covey chop and screw this, so we're gonna start it right now. Welcome, ladies and gentlemen. If you are just joining me right here, right now, we're going to go over risk management. If you ever heard a pro trader or even somebody who at least knows what they're talking about, they'll talk to you in percentages and they will talk to you in R multiples. You guys need to understand that this is the best way to do it because money is going to be relative to whoever you're talking about. If I say I made $10 today, that might be nothing to you. But if I said I made $10,000 today, that might be something to you. But if I said I made 10% of my account today and your 10% and my 10% are wildly different, that is still 10% to each person's account and will still mean the same. 10% is a great deal to anybody. The dollar amount is going to be relative. So that's what we are going to do today. We're going to talk to you guys in R multiples and percentages. And if you learn this, you will become a better trader yourself. Now, let's take a look at this trade that we took. This is a trend breakout. So we got a big push up over here on ASTS. You will see we are always looking for trend and base breakouts. Now, not only did this push up higher, but it followed this 10-day moving average, and I was looking for an area to get in. There were multiple areas to get in. This one I found to be one of the best. Now, I'm also saying that in hindsight, but it's the only trade that I was actually able to get in. So when I seen this actually happen, let me see if I can go on the 5-minute here just to show you guys exactly what happened. All right, and we're going to zoom in on this, and you will see why I took this trade. So here is the 5-minute action, guys, and you'll see here's my downtrend, and here's the volume. You'll see that we had volume dry up here where we come down, and we're getting less and less volume here, okay? You see huge volume on the push-up, and as it pulls back, much lower volume, and then boom. See this candlestick right here? That's where I took this trade. Okay, myself and multiple other people in our Discord, which you're more than welcome to join. Click the description down below, find my link tree, and then click on that. You'll see the Discord. You'll see this beautiful charting platform. You can download this charting platform using our link right there, and you will be able to set it up in our trading school. Just check out the YouTube, guys. We got it all for you. We got everything that you could possibly need. Now back to the section here. So when I seen this, I decided to take this trade. Now, what do I need to do here in order to take this trade using risk management? What is the best way to take this trade? First of all, knowing how much I want to risk. So your R multiple can be whatever you choose it to be, but let's just say it's no higher than 1%. 1% of your account. So if you have a $100 account, the most you can risk is going to be $1. That's the easiest way to think about it. If you have 100% of your account, 1% of 100% is $1, okay? I'm sorry, 100% of your account is $100, $1 is 1%. So let's say we only wanted to risk 1% on this. Now, whatever your account size is, all you are risking is 1%. So now if we take and measure this off this low, we can do all these calculations to figure out our R's. But if you use this TradingView platform, you will see there's a button right here that you can click, which is very, very nice. And you can click this button right here. Boom, I got in right here. And it will bring up your risk reward for you. Then you can change these. And this is what's really, really great about this, guys. This is what I absolutely love about this beautiful charting platform. So what I'll do is I'll grab this and I'll put it, I always use the low of the day. So here's my low of the day. And then this is your risk multiples, okay? So if I want to know what is a 1-to-1, you can see my stop loss is 4.21% here, 4.21% at the low of the day, okay? I entered here, and now I want to know where 1R is. Right now, this is at 1.66, so if I pull this down, right here is my 1R multiple, okay? You can't see that button? What button can't you see, brother? Oh, off to the side? Okay, I'll just show it to you right here so you can see what it looks like. This is what that button looks like off to the side. It's the fourth one down on the left-hand side here, okay? This is what it looks like. And it'll be a risk reward. It'll say long position on it, okay? And when you click it, you click where you want to enter, and then it'll bring up your risk reward for you. Okay, so that way it'll show you the percentage to your stop, and it'll automatically give you a 1R to the top. Now, I always like to take out at 2R. In this situation, I did, okay? And then I let the last half ride, all right? So I'm in this position, and if we zoom out now, we can go on the daily, okay? So where I like to take, and everybody can be different, okay? Where I like to take is at 1R, or I'm sorry, at 2R. I like to exit half of my shares out at 2R, okay? So I did actually exit at, no, I exited half at 1R, and then I let the last half ride. Now, right now, we are at this price action area of around 2045, and you can see on this charting platform, it shows my risk reward ratio. I'm up 12R on the last half of this trade, okay? Now, I could tell you how much it is, but that's all relative, guys. That's all relative. All right, now because I did it on the 5-minute, I'm just going to show you on the daily what it looks like, and that is right here, okay? And if you click on it, you can see here is my risk right here. My risk was 3.69, okay? My reward is now all the way up here at 16.22. By the end of yesterday and today, it got up to there, but right now it's currently at 14.63. Okay, so that's really, really good risk reward, and we're always trying to shoot as momentum traders. We're always trying to shoot for trades that are going to be like 10R multiples. You're not always going to get that. That's why I like to take half out at 1 or 2R. Now, if you guys were with me when I took this trade, the reason why we took out at 1R is because the overall market was not looking the best. We were risk on, but it was just after we were risk off. So this is exactly what we do. Can you show what button it is? Yeah, so I'll just show it to you guys. I just didn't want to move this screen here. I'll be happy to show you though here. All right, so it's right here. Now you should be able to see it. If you click on this right here, is it that one? No, sorry, it's the fourth one down, and you'll have all of these positions here. You'll have projections, volume base, and measurements. You just click on this long position, and if you click on this star, it'll bring it up in your favorites in this section here. All right, so that way you don't have to. So click on the long position, click on the favorite button for anchored VWAP as well, so that way you guys can mess with that, okay? So now let's just go to another, let's go to Apple, AAPL. Let's do something simple here. All right, so we're gonna look at this on the daily, okay? So let's say Apple has earnings, you know, I don't know. Let's, actually I know Google has a trend break that I've played before. Let's find the trend break that I played here. Let's see, new higher lows, base breakout. Here's a trend here. Here's a trend. Here's a base. Okay, so we'll take this base breakout right here, guys. Okay, so let's just say we found this base breakout right here, and we're going to mark this base breakout so everybody can see and understand it. All right, so this is a nice base breakout. We get a nice push up, a pullback, a new higher low. So we got 3 new higher lows, 1, 2, and 3. It's starting to get tight, riding this 21-day moving average, looking nice and tight. Look at this. This looks beautiful. Now we want to take this trade here, okay? Now taking this trade here, we want to risk the same low of the day. All right, so if we're going to take this base breakout right here, we want to risk this low of that same day. So let me blow this up so you guys can see and understand this a little better. Okay, here's your base break. Here's your base breakout on volume. There's the volume right there, okay? So then we click our long position, and we click right where we decide that we're going to take it when it happens. And then we're going to bring this stop right up underneath the low of the day, and we're going to see it's 0.71%, okay? That's the percentage, 0.71, okay? And then your long position, we can bring to 0.71 or 1R, so you know right where 1R is. But let's just say we're going for 2R, so we'll bring it up so the numbers say right here 2R. Risk-reward ratio 2, okay? So we know that the low is 71%, the 2R is at 1.43%, and we know if we take this position at 178.24, what we would do is we are taking this trade 178.24, okay? And then we're going to subtract it from the low, our stop loss, which is 176.97. So we're going to subtract that from 176.97, and that equals $1.27. That means each share that you buy here is $1.27. Okay, so if you have $1,000 in your account and you're willing to risk 1% of your account, which is $100, that would mean that you can take what? Let's say, I'm really guessing here, let's say 80 shares, that equals 101.60. All right, that's close enough. Take one less share. You're gonna take 79 shares of this, okay? You're gonna take 79 shares of this, and that will give you your risk-reward ratio. Does that make sense to everybody? I really hope it does. Okay, so all I'm doing is I'm using this. We'll go through it one more time, okay? So if I want to take this base breakout, I click on our long position. I click on the area of base breakout. We see the volume it breaks out. Let's say we even grab it here, a little higher than we want it. But hey, you know, it's on volume. We got in. We like the trade. We're going to bring our stop loss up underneath the low of the day so that way we can calculate it. And we're going to bring our target for our risk-reward ratio to 2. Right? So we know when to take half at 2. So we set it at 2. All right. So now our risk is 1.05%, which is the low. And look, the average daily range is at 2.16. So that's within the average daily range percentage, right? The risk reward is 2. So now we know we're going to take half of our shares out here at 2. All right. And now we have to calculate how many shares we can take. So let's say we have a $1,000 account. We're willing to risk 1% of that account. That's $100. It's so simple, guys. $100 is 1% of 1,000. Okay, so now we take the area that we're going to get in, which is 178.81. We do 178.81, and we just subtract that from the low, our stop loss, which is 176.94. So we're going to subtract that from 176.94. Guess what? That equals $1.87. If we're allowed to take $100 for our risk. We're going to multiply this and see how many shares we can get. So let's multiply that by 65. That's 121 shares. So we want to multiply $1.87 by 60. So $1.87 times 60. And this is real time, guys. $112. Okay, now we know that we can, we'll take off 12 more shares. So we can do 52 shares. All right. You don't have to be perfect. You don't have to be perfect with this stuff. You just want to make sure you're within your risk multiple. Okay. So we take 60 shares. We're risking $112. You're good to go. All right. And you can do all of that before this breakout happens. If you have this Google on your watch list, you like the base breakout and you want to take this trade, which isn't part of my criteria because we look for higher average daily range stocks, but I'm just using this as an example. Okay. So we get in the stock, we have our stop loss, and within the next 2 days, it hits our 2R. We take out half of our shares. Now, what are we going to do with the last half of our shares? Well, we're going to wait until it breaks this 10-day moving average. Well, look at this. It breaks the 10-day moving average right here, and we're going to exit. So what's that last piece give us? Let's move it up. Our last half gives us a 4R ratio. So if we're risking 1R or $100, we take out half of our shares, which is going to be at 2R. That'll be $100 that we made at 2R. Then we have another half of our shares into this. That is going to give us another 4R. That's another $200. You made $300 on this stock, and you were risking $100. So that's a 1 to 3 on your money. Okay, that's good. That's good. Plan to base breakout right here and met all your criteria. Okay. And this is just something I pulled out of my ass, guys. There's going to be plenty of other trades out there that you're going to want to see, that you're going to want to take. Like we could go to NNE. All right. This NNE, why do I like using this? Because I made a ton of freaking money on this. That's why I like using this. All right. So look, and it's the most beautiful trade you would ever see. Okay. This thing took off right here and we got in right in this area. Okay. Right in this area. We used this low of the day right here. So our risk was 6.79% on an 18 average daily range stock. We took half out at 2R, which was right somewhere about right here. Okay. And we let that last half ride, guys. Look at this. We let this last half ride. Look what happens when you let this last half ride on a higher average daily range stock. Okay. Look at this thing all the way up here. That's a 56 risk reward. That's a beautiful damn thing right there. But if you were using the hourly, so after we get over 100%, you use the hourly 1 hour in order to exit out of this. So I exited out actually right here. I exited out of this trade, which was a 37 risk to reward multiple on the last half of my shares. If that doesn't get you excited, nothing's going to get you excited. Stop trading. Okay. Just stop trading. So that's a beautiful thing right here. And this is a beautiful, beautiful piece of charting platform, guys. If you want this charting platform, go to the description down below, click that link tree and download this using my link. I get a little kickback if you guys end up paying for the essential plan. That's the only way we get paid off this YouTube. Everything else is free, guys. Join the Discord. Everything's free. Hit that like and subscribe. Let's do this. Let's do this. If you guys are new and you haven't been here before, welcome. My name is David Worrell. We have an amazing community. We are always helping each other. We got Dan, Bob, Yosef, we got Muley, we got all the ladies in here. Zamora's in here. Dan, Bob, Dan is the greatest moderator alive. Predator, what's going on, dude? Sorry you couldn't see the button. We got B. Stewie up in this biscuit. Jordan Cruz, you are becoming a regular, sir. Hello, hello. I'm glad it's making perfect sense to you. Dan Bob actually just posted that now in the comment section. I hope you guys have a better understanding of risk-reward ratio. I really hope you do. And now we've had a little confusion in our trading course lately with episodic pivots. I want you, if you have not been trading for a year, hell, if you haven't been trading for 2 years, I don't want you at all to confuse yourself with EPs. I want you to focus on trend and base breakout strategies. That's it. Hone in on one strategy. That's it. Okay? Don't think about the 5-minute unless you're looking at volume. Don't think about, only think about technical analysis. Okay? You don't need to worry about fundamental analysis exactly right now. Once you're in the stock, if you want to look at the fundamentals, or if you have plenty of time to look at the fundamentals of the stock, then look at the stock. But as of right now, guys, if you are learning this specific process, let's hone in on the technical patterns of this. Let's hone in on the volume of this, and let's understand risk management first, because you're a loser unless you're learning. B. Stewie, you know it, baby. You already know, baby. Let's go. Now, if you guys have any questions, please ask. I mean, I hate to toot my own horn or anything, but this was one of my first edges in the market, was risk management. And I promise you this, as long as I stay disciplined, I kick ass in this market. Discipline is a whole nother section, and I don't even feel like diving down deep into that today, because in the past couple days, it has been very, very hard on me. When we're sitting on our hands and we are traders by day and study time by night, it is hard to sit in front of this computer and not trade. So I've taken a few bad trades the past couple days when really I should have been sitting on my hands. Discipline is key here, folks. It is key. So if you learn risk management and you can be disciplined, not just in your trading, but outside of trading as well, those go hand in hand. And if you can do that, you are going to do very, very well in this market. So I really hope that everybody understood what was happening today. And if you guys have any questions, I want you guys to know. How do you determine, this is a beautiful question, Jordan. Thank you so much for asking. How do you determine to take 1R or 2R? Now, if you are only expecting to get 1R out of a trade, that is not good enough. You want to take 2R. The only time that I would suggest taking half after 1R is if we are in a shitty market. So if we look at the overall S&P 500, the day that I took, excuse me, let me put this on the daily. When I took the ASTS trade, it was this day right here. Okay, I do believe. Okay, now look, we're below a 21-day moving average. I'm risk off. The next day, I'm risk on, and ASTS just gets at my 1R. I get into this trade, and right away it pushes up high, and I'm already in the money. I'm going to protect my account at all costs because I don't know what to expect with this market. Okay, so that is why I took it 1R. Now, I do not recommend taking it 1R. I recommend taking it 2R and only getting into the trade when you know the market is bearing fruit. Okay, meaning we have been in an uptrend. We've already seen like this here. We bounce off of 500. We're above a 200-day, 21-day moving average. We're above a 50-day moving average, and we have a follow-through day. Now, any day after this, I would have said, and not in hindsight, of course, I wanted to see a pullback to the 10-day moving average, but I was risk on, and we were taking trades throughout this, but I was trying to get more in, looking for better setups. Okay, so that is the time when I look at 1R or 2R. 1R is something right in here where we get above a 21-day moving average. I'm taking 1R as quick as I can to help protect my account. And right here, I'm going to wait for at least 2R, and then let the rest ride, okay? So this was a trade that I took in ASTS. I took after 1R here simply because we cleared this high of day. All right, first off, we cleared this high of day, and then I always bring up my stop loss to break even. Now, with that being said, the market was garbage, and it is garbage today, but this last half has been proving me very fruitful. I'm in one of the only stocks that are continuing higher. Okay, why am I in this stock? Because the RS rating was at 99 at the time. It was a fast mover, and it was in a hot sector. This is the exact reason why we have all this criteria, so that way we can catch stocks like this. Now, will I get stopped out in this trade? 100% I eventually would get stopped out in this trade, but I'm doing my absolute best to not sell out in the stock, because let's just say the market does turn around. What stock do you think is going to rip, tater chip this damn stock? Because this one is doing good while the overall market is down. Next question. Why is Bob Dan so damn handsome? You know, I think about this constantly, and it's something we're just going to have to we're just all going to have to, as a collective, one day sit down and really figure out why Bob Dan is so handsome. And also, congratulations, Dan Bob, on doing an awesome job at hitting 100 members in our Facebook group. You're doing an awesome job moderating that, as well as Jolene, sweet Jolene, our brand new moderator out there in the Facebook. So thank you guys so much for joining Dan Bob, and he brings in some very, very interesting topics. It's a lot of fun. It's very family friendly, and God bless you for that, brother. I just appreciate everything you've done for this group. Now we have one of these things. Let's take a little peeky gander at the poll, because guess what? It's up and running. Sure, it cost me some time. I had to delete my cookies. I had to do this. I had to do that. And, it was kind of like,
bruh,
why?
Bruh.
Why do I got to do this? It sucked. It really did suck. But you know what? We're back, baby. We got the polls back. We got them back, baby. And the question was, did you lose money on the pullback today? 21% said, yes, I lost money today. That is me too. I included that. I lost a little bit of money today. 7% of you say, no, I made money today. Well, you know what? Whatever. I don't care. No, I'm just kidding. I'm very happy that you did. Congrats on your shorts. 64% of you said I did not trade today. That's what I like to hear. You are the real heroes. I'm going to give you one of these. Yes, you are the real heroes. If you are here and you are a momentum trader with myself and the many others, then you not trading was the best thing to do. A lot of people say, well, I'm a trader. I should be trading. This is what I do. I'm a trader. I should be trading. Well, guess what? You are here to make a choice, whether to take a trade, whether to not take a trade. And if you didn't take a trade, that is a choice that you made, and it's for the greater good. So let's see. 7% of you say chin chimney, here to learn. Well, I'm glad you're here to learn, and I'm glad you're here for the chin chimney. I got a lot of stubbles on that chin chimney. We're going to see how far we can grow this thing out before the wife tells me to cut this tree down. We got 14 votes and 15 likes. I'm not going to complain. That's not a bad night after a huge market sell-off today. Huge market sell-off. One thing I want you guys to do while I still have your attention, if you haven't hit that like and you're here and you're new and you want to know what to do, baby, hit that subscribe button, or at least think about it. Just think about it. And one other thing, click this link tree. You got my YouTube, you got the Discord. You're more than welcome to join, but we want to see everybody going through the YouTube school. We have a swing trader school in there. There's about 6 or 7 videos. It'll take you about 4 or 5 hours to get through it. You can do it in a weekend. And once you get through that, you'll have a better understanding of how we trade. Then, and only then, I would like for you to join our Discord. We have an awesome community here. Everybody will agree with me. We are more like family now that we hang out every single day. And if you want to be a part of that family and you want to learn and you're serious about trading, then join the Discord. And of course, TradingView. Go ahead, click on TradingView, click this link. You're going to love it. I'm going to love it if you do. All right, guys, so let's get right back into it. Do we have any other questions, comments, concerns? I'm here for you guys. You delete the cookies every night after the meeting? Bro, I'm never deleting my cookies again. Never. Never, ever, ever. All right. Well, I think that concludes our section here. We had the risk-reward multiple that'll be recorded. Kobe will take a little chop and a little screw, and he'll throw it in the a new video so you guys can understand this a little better in case you got to go back and learn it. But this is a great indicator, or a little piece to use for this charting platform. When you guys use this, you can do the short position or the long position. I know a lot of you guys aren't shorting or anything like that, but it's a great thing to use here, guys. And yeah, ASTS has earnings coming out here very, very soon, so we'll see. Yeah, baby, 100 people. All right. Well, we do not have a watch list today. I don't think we need a watch list. I don't think it's necessary. I'm still going to go through, we could go through this. I lost money on Max today, about $500 on Max. I played this as an episodic pivot. All right. How did I play it? Well, I played it on the 1 minute And we'll just zoom out here and I'll show you guys how I played it. Here's the episodic pivot. Why was it an episodic pivot? We had a ton of volume in pre-market. We had an earnings beat, a double beat. We had a surprise on the revenue and we had a surprise on the earnings. The earnings was up over 870%. We had enough volume, 1/3 of its average daily volume traded in the first 10 minutes of this trading day. I got in right here. Bada bing, bada boom, we'll just use this. I got in right here on the 1 minute. I used this low right here. And I was expecting a huge multiple on this. But instead, it stopped me out for about 1.5R on this today, guys. 1.5R. I was risk on today because we were above a 21-day moving average first thing this morning. But sure enough, this thing pulled back and smacked me right in the mouth. That's okay. You cannot win them all. You cannot catch them all. This is not Pokemon. So that was my loss for the day. You guys already see my win, which is ASTS. That's going to pay for this loss, unfortunately. So we'll go through the daily, and we'll just go through these watch lists. This is yesterday's watch. We'll just see how they did. Rivian, did it break out? No, it broke down. We have MNKD. It also broke down. We have this stock, PSNL. Can you guess what section this is in? Of course, it's health services. It's still holding up well, still holding the 10-day moving average, and I'm hoping this will keep a base or a trend breakout. But of course, I'm still hands off, so we're going to see what happens with this. We had a MDWD have a breakdown of this area. We have UPC had a breakdown, and then it soaked right back up, but this isn't looking fruitful now that it's not tight. We also have HYLN that Covey also showed us yesterday, had a breakdown. This is in the financial sector. I was very excited for this one today, and I was surprised to see my alert didn't go off on this one. MCB, Metropolitan Bank Holdings in the financial sector, very fast moving, very good looking stock, also broke down today. And we have SLQT, QT in the financial division, still holding a 10-day moving average. I'd like to see this thing hold out. Corbus Pharmaceuticals held the 10-day and is holding this nice base at this top up here. So that's actually pretty nice looking. We're going to see what it wants to do. All right. And one last one. REPL, still holding out on this top. I do like the look of this. The one thing I don't like, no, it's still holding new higher lows. We have 1, 2, and now 3 areas that it's touched. If this thing can trade sideways and get tight, I would love to see a breakout on volume. That's all I got today. Let's see. So I ended the vote here. 60% said that you did not trade today. Congratulations on not trading. 26 said, yes, I lost money today. 6% said that they made money today. And 6% said, chin chimney, here to learn. Damn Yankee said holding a 2.247 on MIRA. So you took MIRA on an anticipation breakout because you actually bought this yesterday or the day before, if I remember. So you really got lucky on this trade. You really got lucky on this trade. The fact that it went up. Okay, and I'm not talking shit. I'm just letting you know. You took this as an anticipation breakout, which I want you guys to know it's never good, and you're not going to have a winning success rate playing that anticipatory breakout. But congratulations to you for making a little bit of money on this. I do hope it holds out, and I hope it goes to 100 tomorrow. But I want you to know that's not sustainable to play anticipatory breakouts. If you play every anticipatory breakout, you will eventually lose money, and that is a known factoid. All right. All right, guys, do we have any questions, comments, concerns, or anything that you want me to take a little peeky gander at today? It looks like we're already running 2 minutes until 10 o'clock. Goodness gracious, that went by so stinking fast, guys. And you know what? I do want to congratulate everybody that is in here. Pay attention, guys. I really mean this. After a big dump like this today, everybody usually walks away from the market for 2-3 days sometimes, or at least they won't be back at least until Monday next week. They want to be spoon-fed. They don't want to see these pullbacks. They don't want to fight through them. They don't want to work hard. Each and every one of you here today is the hard workers. We are the hard workers. We're still showing up every day. We're still showing up each and every day. We're still putting in the time. We're still putting in the work. We're still keeping ourselves well-rounded with the sectors that are hot, the stocks that are hot, and what setups are coming. If we stay this way, okay, and we stay the course, when the time comes and the market starts to turn back around, whether that's tomorrow, whether it's next week, whether it's next year, if we continue to do this, we will be so ready. We'll be like lightning when it strikes, and we'll make a ton of stinking money. So I hope you guys are with me, and I hope you guys had an awesome day today. And yeah, I think that's about all I got for you. So ladies and gentlemen, congratulations to the 60% of you who did not trade today. I'm very proud and extremely impressed because I know it can be hard sometimes. And when you guys start to see this, just keep in mind that these pullbacks are setting up for bigger and better days. I hope you guys had a good one, and I hope you have a great night. We will see you in the Discord tomorrow morning. And yeah, guys, peace. $1,400 in less than 2 hours. B. Stewie, thank you, brother. I hope you have an awesome day. Thank you, Yosef. Thank you, Jordan. You guys are awesome for always showing up every single day, helping me keep this rally running, baby. We are the Bears and we are the Bulls. We're the Bears with bull horns, baby. You better keep that straight. Darn Yankee. I hope you have an awesome fish fry tonight, brother. I see you guys smashing that love. Yeah, let me give a little back to you. Here you go. No problem. Dishing it out. Jimmy Bright says, great night. Thanks, guys. Good night, Jimmy. Thank you so much. And Jimmy, also thank you for shouting me out in Reddit. You know, the fact that you guys are still pushing this out for me, it's building exponentially, and we're building a huge family here, and I really appreciate that, Jimmy, for doing that. Nalani, good night. I hope you have an awesome night. Thank you for stopping in. Covey, the man, the myth, the legend, thanks for meeting up with me a little earlier before we did this, so that way we make sure we got our message across tonight. It was an awesome night, so I hope you have a good night. Dan, Bob, Dan. Dan, Bob, Dan. Not just the most handsome man alive, but the greatest moderator alive as well. Thank you so much for joining me. Predator, you're awesome, brother. Thank you so much for swinging in here. I appreciate you letting me know when you can't see that button. That shows me that you're paying attention, brother, and you are always paying attention, whether it's to my punctuation or to what I am saying. You are always on top of it, Predator, so thank you so much for that. And of course, Zamora, sweet Zamora. Thank you so much. Muley as well. We had all the ladies in the building tonight. And let me make sure I got everybody. Did we get everybody? Oh, Robert Tainch. Thank you so much for stopping in, man. You are a regular. The Reggie, baby. All right, you guys have an awesome night. Thank you so much. Stay cool, friends. Stay cool.